Hey guys, I'm just going to show you how to approach investing in the stock market, how to approach taking a trade on an equity, or how to analyze an equity in the stock market. So we're going to go to the charts and we're going to do that quickly. Don't forget, I've got a free Forex book for you in the description. Pick it up. And don't forget that trading is risky. 80% of traders do lose money. And if you don't like losing money, you probably shouldn't be trading. We always talk about it. Trading is a 50-50 game. It's not something you want to be playing around with. So with that, let's go and have a look at the charts. And I'm going to quickly show you how you guys can effectively invest in a stock in the stock market and how it works to make it just a little bit easier for you. This is an extra video that I'm putting in. And if you guys have got any stocks that you want me to look at, let me know and I'll have a look at them for you, maybe once a week or something to that effect. Let's do that. But anyway, let's go to the charts. Let's go and check that out. So I've taken Tesla because most of you will be using or trading Tesla or be investing in Tesla. It's an interesting product. It's the car. Well, if you look at this, you'll see something different to our normal trading when you're investing. And that is, I've added two indicators going totally against what I normally tell you guys. But the difference here, guys, is this is not trading. This is not day trading. This is not swing trading. This is investing in a stock. What we have here is a 200-day moving average, which is on the yellow, and a 50-day moving average, which is the purple one. Now, why do we have this? We're still going to trade with support and resistance. We're still going to look at our normal everyday systems, but I've added something just a little bit different. And that's because you're investing. When you invest in a stock, you invest in the stock long term, which is forever. You buy it and you hold it and you add to it over the next 10, 20 years. So if you're young and you invest in 10 stocks now, in 20 years time, you're going to look back and be super happy. Now, if you've even looked at Tesla fundamentally and you like the price to earnings ratio, you like the future of the company, you think it's not going to go bankrupt and it's going to do really well in the future, then you're obviously thinking of putting money into the product. But if you look at this, when the 50-day moving average crosses through the 200-day moving average downwards, that's called the death cross. That means this is no longer a valid hold or a valid trade. And if you're an investor in stock, this is the kind of time that I would actually get out of this particular equity and move my money into a different equity. But you don't have to do that if you're an investor. You can actually hold it forever. It really doesn't matter because you can clearly see that although it did drop down, it didn't crash, it came back up and it went back through to the top side. But before you can invest in Tesla, before you can buy into this equity, you want to wait for the 50-day moving average to cross back through the 200-day moving average. And that's what we call a golden cross. Once the 50-day moving average is above the 200-day moving average, you can buy into the stock safely. Now, there's two schools of thought when it comes to investing. There are those of us that have the supermarket mentality, where we believe that if a stock is down at the bottom here, it's cheap, and if it's at the top here, it's expensive. But that only works if you go to a supermarket and something's on special. That's why we call it the supermarket mentality. In the stock market, it works the other way around. If something is looking cheap, it could mean that it's crashing or going to zero, or the company's doing really poorly. And if it's at the top, it doesn't mean it's expensive. What it means is the company's done really well and it's been hugely successful. So it's completely different to the supermarket mentality. It changes things around a little bit. So what we want to do is we want to, just like we do with our trading, take it to a higher time frame, that being the week. The weekly time frame will give you a clear indication. Take it to the line chart as per usual, and let's draw a support and resistance in. So there is a resistance at the top here, a nice clear resistance for this particular stock. If we go down to the bottom here, there is obviously a clear support level as well. There's a nice big support down the bottom here. So now we know where our support and resistance is. Put it back on the candle charts. We always trade on the candle charts and simply take it back to the day. We don't trade on the 4 hour. We don't trade on the 5 minutes. We don't trade on lower time frames when it comes to investing. When it comes to investing, we trade on the day chart. You can trade on the week chart and you can trade on the month chart, but I trade on the day chart when it comes to investing. And when it comes to investing, what I'm looking for is what exactly is happening here. So now they've had a few problems with their last car, which probably caused this downtrend, and maybe that's been sorted out now. I haven't really looked at the fundamentals of this company, but what I can tell you is from a technical perspective, you look at this chart and it's so simple, it's unbelievable. What you're waiting for is for this 50-day moving average to simply cross through the 200-day moving average, giving you a positive trade. Support and resistance is telling you that this is probably going to be a little bit negative for a while. It hasn't turned around yet. It might go all the way down to support and then start going back up again. It might turn before that. But what you do know is you don't want to buy it just yet. What you want to do, you want to wait for this to correct a little bit. It is correcting. So you're going to get a better price. You're probably going to get it at 200 or below 200. And then this is going to cross back through the 200-day moving average, making it your investment time. And then you can buy into this particular type of stock. Guys, if you like these charts, I've left a link for you in the description below. And don't forget during the week to get your trade of the day on the secret blog, which is also in the description, just so by the way. Now I'm going to try and maybe do this again next week. If you guys have got a stock you want me to look at, I'll have a look at it and I'll try and add this video in on the weekends just for a little bit of extra, because there is a few guys out there that are maybe just interested in investing in equity and are not really into doing all the trading thing. Maybe the trading's a bit fast. I know it's always good to learn on the investment side as well as just doing the trading. So that's it. That's how you do it. Pretty easy. So don't forget to watch Monday's video. Thanks, cheers, and bye.